Good morning and welcome everyone. My name is Shalina Begum and I'm your chair for this session looking at funding and investment. We know how important funding and investment is for startups and scale-ups to fulfill their growth potential. The Midlands has plenty of innovative companies who have been successful in raising finance, scaling both in the UK and globally. And we'll be hearing from two of those companies, as well as investors, about the Midlands funding landscape, the impact of the pandemic on this, and if there's enough of a pipeline of opportunity for businesses. So can I introduce you to a wonderful panel? We've got Ardian Muller, who's Chief Exec of Food Hub, Ben Dorks, Chief Exec of IdeaGen, Dr. Sophie Dale-Black, Midlands UK Network Director at the British Business Bank, and Paul Faulkner, who's Chief of Staff at RCL Associates. Welcome, everyone.
Hey guys, how's it going?
Good. So let's start off with Ardian. Sorry if I've called you Adrian, but it's Ardian Muller, isn't it? Ardian, you've had a phenomenal 2 years with the business. Just tell us a little bit about the growth that you've had, and in particular the investment opportunities that you have had, and investment that you've secured.
Okay, so last 2 years were very unexpected. There was lots of challenges at the beginning, same as many businesses. We thought whether we're going to have a business or not with all the pandemic. But for us, that worked in favor because we were able to serve a lot of people who couldn't go out for food. So we were helping businesses go online. So all those restaurants that had to shut down because people weren't going in, we were getting them online, opening a website so people can order for them. So for us, that was great. And then we used that opportunity right at the beginning of pandemic. We were doing a negotiation for an acquisition in Australia. So we were able to get that through right at the beginning of the pandemic and integrate that into our ecosystem. However, there was lots of challenges with that, especially being able to move people around, being able to send our team over there to integrate. But the growth has been dramatic. We went from having about 15,000 businesses on board at the beginning of the pandemic to now having almost 30,000 businesses that we work with.
And that's just not in the UK, that's globally as well, isn't it?
That is globally. We mostly work on most of the English-speaking countries, such as Australia, New Zealand, Ireland, the US, and we've just started now in Canada.
And I've read that you were hoping to raise around £100 million to grow that business and scale it. How far are you into that journey?
So at the moment we're just at the beginning of that journey still, because we've been busy with growing the business. However, we are talking to a couple of large companies to help us with that journey. So our aim is to raise 100 million, and we use that for acquisition. The space that we're in, there's two ways to grow. Aggressive acquisition of clients one by one, or acquire other businesses. Currently, we've acquired 4 businesses so far, and our roadmap for growth is more acquisitions, and that's where most of that funding will be used.
And in terms of the funding, I mean, you're speaking to different people. How are you finding that experience? I mean, you're a growing tech business. Is there quite a big appetite, especially in the Midlands, for your sort of model?
Probably there it is. I haven't dealt much with West Midlands, and this is a good opportunity to get to know and understand what is available. A couple of things that we're working is mostly with City and a couple of other partners like that. So there it is in the tech business. There is a lot of people that are putting money into. So what has happened, especially with the pandemic, a lot of money that would have gone to retail and other businesses like travel hasn't gone into that. So that budget is available for tech businesses.
And plenty of opportunities for you, Ardian. Moving on to Ben, you've actually raised over £103 million not too long ago.
Yes, absolutely. So we're slightly different. So we're a City listed firm and have been since 2012. We've grown from being a market cap of about 12 million pounds when we first listed through to 800 million pounds at Christmas. We won't talk about what it is today, obviously, and we've raised over 200 million pounds along the way, and absolutely, we raised £50 million in December 20 and £103 million in December 21. And we use that for growth, both organic growth and acquisitions. We made 8 acquisitions last year, and we've made over 20 acquisitions in total to enable us to supply regulatory and compliance solutions to over 10,000 businesses globally. And we now have over 1,000 people around the world.
Oh, that's pretty amazing journey, especially over the last year or so. Because it shows there's quite an appetite for businesses like yours, like investors, shareholders, want to be part of that journey.
I mean, I'm a great believer that funding comes from being able to clearly demonstrate a business strategy that's very measurable and very realistic, and that they can see their returns. Investors are looking for value creation. If they want safe havens, bonds, gilts and banks are a far better option. So there is always an element of risk, but they want as a risk-free approach as possible. So, for me, the funding has always been available. We have over £100 million bank over RCF as well, which we're currently in the process of extending. And that's always been available through very clear business strategy and plans, and a good deal of historic execution. I think as long as you're realistic and pragmatic, then there's always good and available funding throughout the UK and also abroad.
Yeah. Do you feel like the pandemic, was challenging in that aspect, or did not really impact you guys because you had a clear strategy of what you wanted and where you're going?
Like everybody, I think the first 3 months, I remember March the 24th, because I actually was moving house when Boris was telling everybody the world was locking down and my worldly possessions were in the back of a van. But once we got through those first 3 months, and my wife spoke to me again, then we actually really had a great opportunity in front of us, and I think we had to look up, not down. And believe in the strategy that we had in place, and we continue to execute it. And I wouldn't like to say we came through better, but I genuinely think that the business was in better shape and more robust at the end of this process than at the beginning, because I think it made us really concentrate on what we do well, and focus on our execution. And the team have done an amazing job. Yeah.
Do you think it's a bit different because you are a public listed company? There's a lot more transparency. People know exactly what you're doing. Any changes, people know about it immediately. How would you say that's a bit? That might be different to a private company.
My honest view is that the rigor and the discipline that being on the public markets is a good thing. And I think whether you're public or private, the controls that you have in place, the openness and transparency that we have with our business and our colleagues and our stakeholders, because we're public, is something that business should do, whether they're public or private, because I think it gives confidence and certainty and stability, and especially in these current times, that is a currency that is very, very valuable. So for me, the rigor, the transparency is a good thing for all businesses. Not just being a public business.
Thanks, Ben. And moving on to sort of the funders side, Sophie, I know British Business Bank across the UK have had, again, quite a busy year, a lot of businesses needing funding. Which areas have you seen the most demand for?
Yeah, thank you. Great to be here, everyone. British Business Bank is the government's economic development bank, and very much involved in helping the smaller businesses to access the finance they need. And I think what's really interesting from the research that we've published recently is that the equity investment in the Midlands has actually really grown quite nicely during the past 12 months or so. It's grown quite significantly over in the East Midlands, but by about 75% or so extra, but from a lower benchmark, and that still has some way to go in the growth there, but it's a good picture for the Midlands as a whole. I think the research also has shown that kind of appetite is there for using external finance. And there's a couple of statistics I can share with you. One, an 8 percentage point increase in the ambition to grow businesses. That's really significant. That's across the UK, really, really interesting. But what I do think is also fascinating is the Midlands has a lower appetite than the UK for using external finance to grow. So there's still some work to do to demonstrate the positives that this investment can have for those businesses, but it's still grown. And so we have to take the positive there, but it is a little bit lower than the UK level. There's great funds out there available, Midlands Engine Investment Fund, various others. But I think the really good point is that the breadth of investors has increased across the Midlands. There's new investors coming in. There's still quite a reliance on London investment coming in, particularly in the East Midlands. But the fact the investment has grown, the number of investors has grown, that's really positive for the future.
You sort of mentioned the appetite may be lower compared to the parts of the UK, but with more investors coming into the Midlands, do you think a cultural change is going to shift businesses to think more about investment opportunities?
Yeah, I mean, the culture change is fascinating. The statistics are, it's early statistics that are showing that use of the COVID loan schemes, for example, is starting to change some of the attitudes where normally those businesses wouldn't have used external finance. The growth is coming there. So really showing the opportunities where they've used those those loans in positive ways and pivoted their businesses and moved forward alongside the businesses that really needed those loans to stay open and stay afloat as well.
Yeah, when you say the pandemic has affected how businesses approach this now, I mean, pre-pandemic, the government funds weren't available, but they've had to now think about that and consider that. So would you say it's been quite positive, pandemic, on the funding landscape? Or
well, quite a few of the programmes were around beforehand, but I think what is definitely interesting is the Midlands Engine Investment Fund deployed 50% more last year, 2021, than it did in 2020. So the kind of the bids in for it, they're really there. But certainly some sectors did obviously have a very difficult pandemic, and yet the manufacturing sector is still the most active in the Midlands Engine Investment Fund. And I find that quite fascinating to see the opportunity there that's still in that sector, despite all the challenges and still ongoing with supply chains and all sorts that sector experiences.
Yeah, it's quite a resilient sector, isn't it? Yeah. Thanks, Sophie. Paul, just moving over to you. I can see you agreeing with Sophie on certain points. What's it been like for you guys over the last year? You guys are looking for ambitious businesses to invest in. What's that been like?
I mean, there's so much opportunity. So I worked for the Richardson family, well known in the West Midlands, sort of 30, 40 years ago, for developing the Merry Hill Shopping Centre. And in the last 30 years, it's still a family run business, and we've diversified our portfolio, so still very active in all sorts of real estate all over the UK and the world. But about 6 or 7 years ago, started to develop a growth capital portfolio as part of that wider diversification strategy. So this is slightly later stage, and it's a bit like Ben was outlining. Really, it's good businesses with great management teams who are looking for new capital, new investment to help accelerate that growth. And like Ardian was sort of saying, to go out and have that plan to maybe be aggressive and make those acquisitions. And if you can't do it organically, then what we hope is that we can sort of link up with those businesses, those great management teams, and provide the capital which accelerates the growth further. And so being a family led business, it's private money. I think there is quite a vibrant scene, certainly in the West Midlands and maybe increasingly in the East as well, of different sources of funding. We've got our own sort of unique selling points being family led. That maybe makes us a bit more flexible, a bit more patient, just different. It's not to say better, but it's just a slightly different approach, because ultimately in our investment committee, the family will still have a say, and we feel our businesses and bring that passion very much to bear. But no, I mean, there's tons of opportunities out there. I think that the challenge for businesses seeking investment is that it's a global market, it's a global race, and so our business, we're based in the West Midlands. I'm sat in the Black Country today. We've got an affinity with the region. I'm a passionate champion and advocate of the West Midlands, but we're looking at opportunities all over the world, and I suppose that's what we're trying to do, is to be in this system as well. But I think that's where businesses have to have that very clear strategy that Ben, I thought, outlined and articulated really, really well. Because if you're not good at pitching it to the investors, then there's other people elsewhere who will be, and that's where the investment will go. So it's sort of a two-way process, and from our perspective, there's no hometown discount. If you like, we've done lots of work here in the West Mids, and we would keen to do more, but the opportunities have to really present themselves well.
Yeah, absolutely. And Paul, you made quite an interesting point there. You talked about management teams, because investment isn't always about the business. It's making sure that it's got the right people on board. How important is it to make sure that the chief exec is someone that you can get on with, who's got good strategy in place? Because it is about the relationship at the end of the day, isn't it?
I think it's key. I think it's absolutely essential. And from our side, we're not looking to come in and run the businesses. We're looking to back the people who've got the ideas and the ability. We're kind of a source of funds to enable them to realise their plans. And so understanding, building those relationships, absolutely, probably the most critical part of it. There's loads of great ideas out there, but it's the ability to execute and to lead a team and to go through all of the challenges that the growing a team brings with it is key. And that's where the real skill is. I think everybody in business I know would say the most demanding part of your job is the people part. Yeah, it's most rewarding as well. But if you don't get that right, then you can have the greatest idea, but someone who's executing it and got a better culture will, I have no doubt, will go past you.
Thanks, Paul. And just staying on that point, and Ardian and Ben, I know you're businesses that are now investing in other businesses in terms of acquisitions. Is it the same case for you guys? Because the business is a viable business that you're investing in, but the management team is also one that you can get on board with. Ben, do you want to?
Yeah, I mean, we buy a lot of businesses, and you are, of course, you're looking at customers, you're looking at the sort of financial model, but it's also about people and culture. And we have very much a one brand, one company, one culture philosophy. But it's much easier to integrate organisations in if they have a very similar overlapping culture, values, and philosophy. It's much harder if the cogs of the wheel are working in the opposite direction to bring them in successfully, and then to be able to grow them. So, for me, and just picking up on Paul's point, it's not about the chief exec. The chief exec, I think, is for those that are old enough, the good old game of Trivial Pursuits. It's just one very small segment. It's about the whole team, and especially the people officer, the head of product, the head of technology, the head of sales. Are they living and breathing those same cultures as well as the rest of the company? So for me, when we're acquiring businesses and investing into those businesses, then we are very much looking at the people and the people culture. And as Paul said, how well can they articulate the strategy? Do they really believe it? I listen to and read a lot of IMs, information memorandums, sorry, and speak to a lot of businesses, or daily. It's part of my job. And I have to say 75% of the people tell me a story, but I know in their hearts they don't believe it either. And so for me, a lot of the investing in businesses comes down to believing your story, being passionate about your story, and creating a purpose and a vision and a culture that the business embodies and believes in every single day.
Yeah, I think authenticity plays a huge part, doesn't it? You can see through that if they're not authentic.
It's easier when you can say
it. And Adrian,
I'm not even going to try.
So Adrian, you guys made an acquisition right at the start of the pandemic in Australia. Couldn't go over. How do you work out if the culture is going to fit your culture, or if you want to create a culture, how do you embed that when you're not together and you've not been over?
Yeah, so that's the difficult part. So we're talking about the team and the people that you have on there. So the most important bit you need to realize when you buy a business, what is the founder or the owner or CEO? What's their goals? Because if their goals are just to exit, retire, have an easy life, then as long as you know at the beginning, then you work on the management underneath it, because those are the people that are going to drive. Those are the people that are hungry to show what they can do. Obviously, integrating across the world is a very big challenge. Having the right people, like you guys said, is the most important thing. But you've also got to understand that you've got different cultures, and you can't try and say what works in UK is going to work in Australia. You've got to have that understanding. You've got to also give them freedom. So what you can't do is say, oh, everything has to go through head office. That's not. You've got to give those businesses enough power to be able to operate, to be able to run, to be able to bring success. You've acquired that company or invested in that company because of what they do. They must do something good. That's why you bought them. So you've got to let them run with that. Help them, support them, but integrating the companies and cultures, probably one of the most challenging things. For us, we got people all around the world, and that is a big challenge. But as you said, that could be the rewarding part. But one of the things I want to pick on, earlier we were talking about, yes, there's a lot of funds around Midlands and that. Probably. But I don't think Midlands is ready yet. And I think there's a lot of work that needs to be done to help the businesses show that there is investment, there is growth. We're not in the same league as you see it in US. In US, it's all about build a business, get investment, hyper growth. Whilst personally, with very little that I know, around Midlands is sort of, you know what, just keep growing it yourself, keep doing what you're doing. And I think there needs to be more exposure to say, look, there's lots of businesses around Midlands that can help you with that growth, can help you with that journey. And that journey is not as daunting as it may seem. Because you start to read on the internet and you think, oh my God, I'm never going to do it.
Yeah. Ardian, as an entrepreneur, what would you like to see?
I'd like to see more easy access to funding, but better getting businesses to understand what is available. So, for example, the British Bank, I'm sure they do some amazing work. However, I've never heard of them. And I know there's lots of other businesses that are growing that I personally think that benefit from that investment. And the businesses need to be more open towards, it's okay to give a little bit away because that's going to help you get more, rather than being, you know what, I've got to just keep growing the way I'm growing. Sometimes in Midlands, I feel we're scared of debt. We're scared of giving things away, when actually that's so important to grow the business. That's so important to get out. And I was one of those businesses. Before, I don't want to borrow no money from anybody. I was like, if we can afford it, we buy it. If we can't, but then I found it the other way. The money I borrowed to buy a business, I made it back within a year or two. So now all that income is bringing better clients to us and more money.
Maybe it takes entrepreneurs like yourself to talk about your journey a bit more to encourage other entrepreneurs to take that leap, that step towards accessing funding if they're a bit scared.
I have to say, I think you are absolutely so right with that. Is that, you know, in America, I think it's a great example. But you know, the view in America is we want to grow, and if we have to give away 20% of our business to enable us to double, then that's a fantastic return. And you know, most UK organisations just don't necessarily think in that way. You know, and I think I think the other fantastic point you raised is that you have to use the access to funding, because there's a whole host of skills that you get with these organisations that fund into you. You have to be, you know, a learn-it-all, and use them to really help and improve and grow your business, and not view them as a challenge, but view it very much as an opportunity. And I think that for me is, there are lots of different avenues for funding available, but you sort of have to go very much with your arms wide open, and use it as a really positive experience, and not view it as a criticism of your business if they think you can do this better, or this is a productivity improvement you should be doing because, hey, they've got 10 companies in their portfolio that do, or even the banks. The banks are a great source of access and knowledge and information, and then questioning your 3-year business plan is not a critique. It's a way of challenging and driving you to be better operationally. And I think there's two great examples that you provided that really.
I also think the government needs to get a little bit more involved at challenging the banks to help businesses grow. I think some of our high street banks are too cautious. They're too risk averse. Anything that is not bricks and mortars, we're sort of gonna keep away from, and that's where new investment needs to be. So you got to be able to. Most of the people have that relationship with their banks. They just go to the high street bank, whichever one it is, and those banks sometimes, personally, with experience I've had, I see them as a risk to the business rather than help, and that shouldn't be the case. Those should be the business that get in, they help you grow, they show you what you can achieve, and then help you get to that next level where you can get bigger investment.
Thanks, Arden. Can I bring Sophie and Paul? And there's been quite a few points made about the funding landscape. Maybe there's not enough happening in the Midlands, and still there's that cultural education piece that he's working on. Sophie, do you want to just tell us, how is the British Business Bank accessing their portfolio and their companies? And do you think, a lot more can be done?
Thank you. Ben and Arden's points there are really, really important. And we work with the Scale Up Institute quite a lot. And Scale Up Institute do a lot of survey work with the highest growth companies to find out what the drivers are, what the issues are. And, one of the big issues is what I call navigation of this system. How do you find the investment? How do you understand the support that's available? And it is really interesting that 6-7 out of 10 scale-ups around the UK want a single point of contact as a relationship manager. In the Midlands, that's higher still. So we understand the need to navigate and understand what's going on and how to get that support and that help. And I think it is a challenge to find the right investor for the company as well. It is, I believe, it's two-way. There are options out there, and the business has to choose the right option for them.
Thanks, Sophie. And Paul?
I spent 6 years running the Greater Birmingham Chamber, and I think that the business support landscape in this country is overly complex, and too often it's not getting the support straight through to the businesses. It gets kind of caught up in the blob, and it's really, really hard for people to navigate, harder than it should be. So I think that there's work to be done there. And I suppose that's where one of the things that we're trying to do as a private business now looking to invest is to, play into that, but equally plow our own sort of furrow, and get out there. And we want to meet those businesses who, as Ben, as Arden sort of said, are looking to grow, and we want to make those relationships. We're opportunistic, I suppose. And that's where the best stuff sort of comes from. We don't want to be necessarily part of processes. We want to be off market, meeting of minds, spot the ideas and the opportunities, and sort of come in and invest. And that's where we've had a lot of our sort of success to date. Co-investing, being alongside other partners as well, doesn't have to be exclusive. And it's in quite a large number of cases, it's minority interest. And maybe there's a good thing here is we've been talking about is the education of the business community, and where getting some equity in can accelerate your growth. It doesn't mean giving up your business, and maybe I think the States is undoubtedly far more developed and sophisticated in that regard, which probably makes it easier to get that flow of investment going. So that's a good takeaway actually, to sort of maybe sort of feedback just how do we help that broader education of the business community. We've all got a part to play in that.
How do you guys access your funding? so your companies, I mean, how do you sort of, advertise, I guess, what you've got to offer, Paul?
It's joining wonderful conferences such as Invest Midlands. It's tapping into existing networks. It's getting out, wearing out the shoe leather. A lot of it are existing relationships and just speaking to people, making people aware that we are in this game. We're looking for investable opportunities. As I say, our criteria's quite well defined. We call it growth capital. We kind of look to invest between £2 to £10 million per investment. So it's not in the startup or sort of early stage. It's further along, and you just got to keep on sort of banging home that message, and I think trying lots of different avenues and channels for that. But we're not short of opportunities. If anything, we'll look at hundreds of opportunities in 12 months and maybe invest in 5 or 6. And that's not just in the Midlands. That's coming from our sort of key markets, which would be here, North America, Australasia. So it's just then the sort of the sieving. So we've got plenty of opportunities. We just want to find the really, really great ones.
Yeah. Sophie, were you going to say something then? No, that's fine. We've only got a few more minutes left. I just want to ask a quick,
just 2 seconds though on that. We're talking about investment, but personally, I would like to see more. Every time somebody does an investment, it's all over the media, all over the news. Great, this company got investment. But what I want to see is afterwards, after a year, after 2, did that person go to a safe pair of hands, or did it crash and burn? So I want to see those success stories afterwards, and I can say, you know what? Actually, looks like that company did well with this investment. And for me to raise investment, if I raise investment from US, I'll be like, oh, is it the right choice? Is it the right market? Do they understand the British market? And obviously being with somebody in Britain is going to be a lot more better. But there still needs to be more insight to say, this is how things are going. This is what this company was able to do or to achieve with the investment. So there still needs to be more.
I was going to ask, is there any sort of words of advice for, entrepreneurs looking for investment? What would you suggest, Ardian?
Don't be scared. Give it a go. You've built a great business. You've done really well. And to be honest, we've dealt with bigger challenges than investments. And I don't think it's as bad as it may seem at the beginning. So give it a go. Talk to people and then understand who's the right partner. And as I think you guys alluded to, it's all about the partner. It's all about who you work with. And the only way to know is to speak to people. Just because you speak to people, you speak to investors, it doesn't mean you have to take their investment. And if you find the one that's a right fit and you believe in, then it's your choice to make that decision.
Thank you. Well, Ben, what about yourself? What's your sort of advice to founders, entrepreneurs looking for investment or looking for follow-on investment even?
I think it's a great point. The only way to actually get investment is to go out and talk to people. For me, as I said, a lot of it comes down to making sure that you're able to clearly articulate your strategy, your plans, that you understand, the risks that they're looking for. It's as in any great negotiation, the first part of negotiation is to understand it from the other person's perspective. So although you're asking for, I've started my own business all the way back in 2004, through to where we are today. And the only way is really to understand it from their perspective. And although you may think it's the best idea in the world, you've got to start asking yourself difficult questions. And when you get that and you really believe in your plan and you really believe in your strategy, and you feel like you can really articulate it, and please practice your pitch, because it does really matter. I do agree, Paul. I know these people speak to hundreds and hundreds of different organizations, and a good pitch is still a good pitch, and it makes it a lot easier to move through the next stages. So, for me, it's absolutely talk to people, believe in your strategy, invest some time in your plan, and practice your pitch, because you do only get one shot at it.
Yeah, absolutely. Thank you, Ben. And also, we've got people like Paul and Sophie, representing great organizations. There is funding out there. And as Ardian said, just be brave and go for it sometimes. Well, that, brings us to an end of this session. I found it really fascinating. I want to thank all our panelists for their insights and sharing their journeys with us. Up next, we have another session coming up, also looking at funding investment. We'll be speaking to Sandy Reid, who's Deputy Fund Principal at Mercia, who is in conversation with Alex Turner, and she'll be shedding some light on what funders are looking for in their portfolio. Thank you.
Thanks for joining us at Invest Midlands. Obviously, it's been a hugely disruptive couple of years for all sectors. What's been the impact on business investment?
Surprisingly, it's been more limited than you'd expect. I think during the very initial stages of the first lockdown at the beginning of the pandemic in 2020, investors did become incredibly distracted. I know at Mercia, we spent that time really trying to support and look after our portfolio. So we spent a lot of time working with both the CEOs and the CFOs of all of our portfolio businesses to replan and scenario plan as they went through the pandemic, because at that point we had no idea how long it was going to last, what the problems were going to be. So we all had to go out with doomsday scenarios for every business to make sure that they were prepared for what might come. As we all settled into the rhythm of the pandemic, actually, we then had some time to start thinking about new investments, and we did continue to invest. So I think after that first quarter at the beginning, where there was some disruption, I think business not quite as usual, but still very active and doing everything remotely, which was new for us. It's the first time we've done due diligence, for example, without actually ever visiting a company site, but everything was possible and we did manage to keep investing. And demand has stayed reasonably strong throughout the lockdowns, but with the final lifting of restrictions, we've found that the market's incredibly active. A lot of businesses out there looking for investment.
Yeah. And I suppose in one respect, Mercia was fortunate in that your strengths pre-pandemic were technology and life sciences, among others, and they were ones that really came to the fore once the first lockdown hit.
Yeah, absolutely. I think we did have a handful of business, like many investors, that got real COVID tailwinds behind them, as you pointed out, in the life sciences sector, but some software businesses as well. And we didn't have a lot of exposure to those sectors that were particularly hard hit. So whilst we do have some B2C companies in the portfolio, as you point out, most of them were B2B. It's not been an easy time for some of the companies, and there are lingering issues. I think supply chain problems, not just in early stage venture-backed businesses, but across the whole of the SME sector, still continue to cause significant difficulties. And the one that's at the top of the risk register for most businesses that I know is staff retention and recruitment. It seems incredibly difficult at the moment to get highly qualified staff into any business.
Yes, no, it's a common complaint, yeah, regardless of sector. What is the appetite for businesses at the moment for growth? Are people kind of shedding themselves of the caution of the last couple of years, or is there still a nervousness about what might be ahead of us?
I think it's interesting, and every sector has its own approach, and every management team have their own approach. You have to remember, because I work investing in early stage venture, these are the entrepreneurs and the management teams that are more comfortable risk taking than perhaps in more traditional industries and large corporations. So we've seen, as I said before, a real steady stream of interest in raising venture capital. I think there is now a sort of shedding off of that we're in lockdown, we maybe need to be a bit more cautious and people are ready to go. But as soon as that happened in January, then the war in Ukraine started, and that's having an impact as well. And we're not quite sure where that will fall out ultimately. Is there going to be an impact, for example, in EIS money coming into the market? Unclear at the moment. We co-invest with angel investors. Are they going to become more cautious? Some early signs that that's possibly true, but a bit too early to definitively say that. And again, back to supply chain issues, what's the impact going to be on supply chain? So I think people have become more comfortable with the idea that things do go on macroeconomically. The pandemic's actually open people's eyes to the idea that it's not always going to be stable and steady. And for the entrepreneurs, that doesn't tend to put them off. They're the people who want to go out there, have a real passion for their business, are excited about what they want to do, and are naturally more inclined to take a risk. So, like I said, our demand for venture capital investments definitely held strong.
And of course, yeah, as the cliche says, disruption creates opportunities, and that can really help the early stage businesses. Which sectors are particularly ripe at the moment and are performing strongly?
Well, it's interesting. I think it's the same sectors that you see traditionally doing well with VC investment. And across the Midlands, we always find that there's a good selection of software businesses, but also life sciences and manufacturing. They're the bedrock of businesses in the Midlands. And so we see our fair share of those types of businesses as well.
And Mercia is, very, very firmly a regional investor, but London's typically sort of dominated the VC market. Have you seen any shift in recent years from those, I suppose, London-centric investors to look more closely in the regions?
I think there has been that trend. I think we have seen more of the London-based investors coming out, and that's through a variety of means. Obviously, if a business is invested in by Mercia, we have our own network with those London investors. So for later stage rounds, we're well placed to make those connections. I think the challenge of London investors coming out into the regions is the age-old one that one trip on the train to Birmingham doesn't make you a regional investor. And there's still the idea that you can jump on a train, go to Birmingham or Manchester and see all of the regions have to offer in a one-day trip, which I think, is a little naive and frankly sometimes a bit insulting for some of the other parts of the regions. And I think that's a real strength of Mercia and the other investors that work in the regions, is that we all live on patch. We live where we invest. We build up those networks. We take time to get to know the companies. We're accessible to them. And I think you have to have that kind of presence to really find the best businesses. One trip into Birmingham a couple of times a year is not going to find you the quality deals across the whole of the Midlands.
Yeah, and is it fair to say that, I suppose over the last 10 years or so, kind of the speed of growth of those early stage businesses has become phenomenal? Businesses that have gone from back bedroom to almost household names. I'm thinking Gymshark, but there are lots of others on that sort of trajectory. Where, because things are moving so fast, actually makes it so important that you are in the region and knowing about these businesses from very early on.
Well, so as an early stage investor, yes, you want to find these businesses early, and the only way you're going to do that is if you're on the spot to find them. The other advantage of those really well-known examples, those fast-growing examples, is they really demonstrate that there's value to be had, and that's what investors everywhere are looking for. They're all looking to show that you can make a return from the investments that you're doing, and that's something you have to keep in mind whether you're regional investing or London investing, is that your ultimate goal is to make a return for your clients. And so those really strong examples starting to come out of the regions, that grab all the headlines, do demonstrate that that value is there to be had. The interesting one is that some of the really valuable businesses don't have those big brand names and maybe aren't as well known. And that doesn't make them any less successful. So it's about championing across the board, not just the ones that are very well branded. And, Gymshark have done a fantastic job, but the whole of the Midlands space is not Gymshark, if that makes sense.
Absolutely. and one of your hats at Mercia is deputy fund principal at the Midlands Engine Investment Fund. Mercia operating that model of having third-party funds and its own money to invest in businesses. But just on the investment fund itself for now, what impact has that had on the region, and how successful has it been?
So it's really hard to judge the success of a fund until you get to the end of a fund and you've seen all the returns that come through. But I would say what it's really done is accelerated the amount of knowledge in the regions about taking equity investment. I mean, we use that alongside both our EIS funds and as businesses develop our balance sheet, our VCT funds to help them grow. And all of that works together with every success to show what's possible with equity investing. And as that knowledge seeps out into the community, you get more and more people saying, well, me too, I've seen what that company's done. I want to do the same thing as well. We have got some successes in there at the moment, and they are starting to grow and go through that acceleration, which is what you'd expect to see. The fund launched in 2018, had a remit of doing startups and early stage businesses. There's always going to be a time lag from moving from that startup phase to really accelerating through growth. But I am pleased to report that actually there's a nice cohort coming through on our Midlands Engine Investment Fund portfolio now that are moving up to that Series A sort of territory, whether that's through revenue growth or having proven out their technology. So I think there's some more good news stories to come.
Yeah, it's particularly impressive given the disruption of the last couple of years and the fact that nobody could plan for that. I suppose that plays to Mercy's strength of being able to see across lots of businesses in a sector and to be able to support businesses with what they need at any given moment.
Yeah, absolutely. And I always say never choose an investor based on just getting the money. If you only want money, then you probably don't want to work with Mercia, that's for sure, because we always like to think we're value add investors. It's got to be money and experience, money and access to the network, because that's what's going to make the businesses successful. And so we work with our portfolio companies. We do take board seats, we support them with our knowledge and our experience of working across a range of businesses. But then we've got other add-on benefits. We have a non-executive director network which we can tap into. It means we have access to people maybe that an SME based in Lincoln or Worcestershire wouldn't have access to. And they're really high quality people, and they can make a significant difference in the planning the strategy of a business and how it's going to develop. And then the other part is the partnerships that we have. So we keep a range of partnerships with everybody from Amazon to HubSpot. So if you're a software business, there's discounts to be had there as well. So it's always about looking for somebody who really understands the space you're in, the sector you're in. And I like to think that Mercia adds a lot of value alongside the money that we invest.
You mentioned about partnerships. How important are those? And I suppose the collaborations that exist in the wider ecosystem in the Midlands.
Yeah, and that's back to what I was saying earlier about all of the investors at Mercia actually living in the patch that they invest in. And it means that we build up relationships, whether that's with universities and the spin-outs that they're looking to generate through their intellectual property, or whether it's with the incubators. Certainly in the East Midlands, you've got places like BioCity and Nottingham, all the work they do with life sciences. And I think if you're based on the patch, it's really important to build up that set of relationships, whether that's in Lincoln, Nottingham, Birmingham, or anywhere else in the Midlands.
Yeah, and I think it's that variety that makes it interesting. You made the point earlier about, it's not just about come to Birmingham and have a quick run around the city, but it's what's happening on the industrial parks and science parks, right across the Midlands that, where there's opportunity.
Yeah, don't get me wrong, there is good stuff to be found in Birmingham. It wasn't meant to be there's nothing good in Birmingham. It was there's Birmingham and there's everything else that the Midlands has to offer.
Absolutely. And, Mercia itself's a good example, tucked away in Henley and Arden, and it's been on its own, growth journey in recent years, and it really established itself as a major player. So how has Mercia, managed to, grow as strongly and consistently as it has?
It's a really interesting case, actually, and it's nice to have it as a place to work when you're trying to support businesses going on the same growth journey. So the Mercia sort of story is 2010, 3 employees, Mark Payton, leading the business, and I think it was 12 million of funds under management. And here we are in 2022, 120 staff, 950 million of assets under management. It's a big journey to have gone through in a relatively short space of time. And actually, there's learnings to be had from that, because growing through those different phases is the same journey that we're trying to take our portfolio companies on. And I think it should be considered a real success story of the Midlands.
No, I'd agree. It's been fascinating following the journey. particularly for me over the last sort of 5 or 6 years, and to see how the ambitions have translated into delivery, and then there's an exciting kind of growth trajectory ahead. How important is it to the region that you can get big players like Mercia based here having a real impact here?
I think it's really important for lots of reasons, because everything's interconnected. You've got entrepreneurs on the ground who maybe feel, oh, equity's not for us, or venture capital investment's not for us, because that's something that happens in London. So by having Mercia and other players, actually actively investing on the ground shows that this is something for the regions and can add value. It builds on that all the time. And so I think there's that advantage. And as more businesses build up that show that you can be successful this way, that show what's possible, the more businesses you get applying for investment. Hopefully that will mean that there's too much for Mercia to do and more people will come along as well. And the whole thing becomes self-perpetuating. But it goes back to my earlier comment. You're only going to convince more investors to come out to the regions, to come to the Midlands, if you can show that funds will be successful here and that you can make a commercial return. We're not out here to give out grants. That's not the idea of what we're trying to do. We're trying to build a really thriving business community, and one that's going to grow.
And you talked there really, I suppose, about momentum. One of the things that does have real momentum behind it is the ESG agenda, particularly in terms of business investment. And I know you're a member of Mercia's Responsible Investment Committee and have that focus on ESG issues. I suppose, firstly, what's changed? What's caused that to move from, I suppose, a nice to have to a need to have part of a business's story?
I think it's a really interesting one, actually, because there's two sides to the ESG debate interaction. One is looking to yourself and what do you do around ESG? And then for an investor, it's what can you do for your portfolio around ESG activities? And one of the things that came out really strongly at Mercia when we formalised our response to ESG was we deliberately didn't call it the ESG committee. We called it Responsible Investment Committee. And everybody that I spoke to through the business said, but this is what we do anyway. These are the things that are important to us. We live in these communities, we work in these communities. So we've got a big focus in terms of what we're doing around, getting rid of social inequality, for example. And part of that is investing in the regions that have been underserved. And that's something that Mercia has always felt passionately about, and all the staff at Mercia felt passionately about. So it's been a really easy fit for us. It's maybe now properly badged as responsible investment or ESG, but it's something that's really at the core of our business anyway. So we look to ourselves and what we can do better on this front, whether that's from what does our staff recruitment look like? Do we have a good gender balance in the investment team? Is there something more we could do around that? And it's not just about gender balance, it's about ethnicity, it's about social mobility. What can we do to make Mercia a greener place? And then once we've looked to ourselves, what can we do to support our portfolio? And I think that's where our board seats become incredibly important, because maybe an SME that's very focused on growth and the day-to-day struggles of building their business, it's not going to be at the top of their agenda. But we can introduce that to them. That's a governance piece. That's the G in ESG. Talking at board meetings about what's important, how you should be interacting with the environment around you, with society around you. So for us, it's been a very natural fit. But you're right, it has been snowballing generally. And I think has been driven a lot by our clients. The short phrase for them is the LPs. These are the people who put investment money into our funds for us to manage. And they've become very aware that society has moved in a direction that makes ESG more important. And one of the ways that they can make that impact is to make it important for the fund managers that are running their funds. So Mercia is incredibly well positioned to deal with the ESG debate because, like I said, it seemed to have naturally sat at our core anyway.
And does it have impact, or what impact does it have on businesses that are coming to you for funding? Do you have sort of minimum expectations, or do you just want them to be kind of open to a conversation of how they would develop once they came on board?
Different businesses at different stages require different intervention. And there is, as always, across investment, no one size fits all. So a business that might come into our private equity funds might have a very well-established board, be profitably trading, and already have ESG elements on their board agenda and be working towards things. There we can provide some advice and help steer them. That's in complete contrast to maybe a 1 or 2 person founding team that's starting a startup. They've maybe never even considered ESG. And actually a really good starting point there is the G, as I mentioned before, the governance. We can introduce a non-exec director to them or an independent chairman to them or chairperson. And that then brings that onto the agenda and improves the governance in a way that maybe they wouldn't have had if they didn't have external investment. And then it sort of spirals from there. I think it always has to be iterative. There is no one solution that we're going to bolt on an ESG policy to a new business and then suddenly it's all going to be fine. Every business has very different requirements. And so working with each one is the important part of that.
Yeah. And we're nearly out of time, Sandy. So just to finish up, what are you most excited about for the year or two ahead of us?
Well, so we've still got plenty of investing to do from the Midlands Engine Investment Fund and the other funds at Mercia. And so I'm always excited because you have to be as a venture investor, because every new opportunity that walks through the door could be the next really exciting thing for you to work with. So I find the ongoing part of our job actually really exciting. And it really suits my personality because it means I get to do different things every day and look at different businesses, different sectors, and work with different management teams. So I don't think there's any one thing that's really exciting. It's just that ongoing finding those new innovative businesses, because that's what gets you up every day to go out and invest as a venture investor. You always think, well, today might be the day that I find something really exciting to invest in.
No, that sounds great, and it's great to kind of retain that enthusiasm for what might be coming across your desk. Thanks very much for joining us, Sandy, at Invest Midlands. That was really interesting. I think a lot for us to take away.
Hi, and welcome back. And that was really interesting to listen to Sandy at Mercia. So for the next part of this session, I'll be speaking to Rob Darby, who is co-founder of 200 Degrees Coffee, about his experience in attracting funding. Welcome, Rob. You're on mute, Rob. Hi, welcome.
Hi, thank you very much. Yeah, it's good to join you.
Yes, definitely. I mean, you as well have had quite a growth journey. And before we get into the funding element of it, can I just ask, if you could just briefly describe, where you guys are at the moment in terms of the scale of the business?
So currently we've got 15 trading coffee shops, 2 in the build phase and a few in the pipeline. We have a wholesale business offering, which is turning over just under 2 million a year, and then we have a subscription and online business, which has grown well during the pandemic. Online has been one of the success stories during the pandemic in the last 2 years, and then we also have a training arm to our business. So we have 5 barista schools around the country where we train people in various coffee skills. So it could be something to do with making coffee at home and using your home machine, or some of the homebrew methods, through to training our wholesale customers on their commercial machines. So we're just over 200 employees. So that should give you a bit of a flavour of where we're at right now.
Yep, it's definitely giving us a flavour. Made me want some coffee as well. You're not a traditional coffee business at all, are you? There's so many different elements to what you guys do. So you started a business in 2012.
Mm-hmm.
So it wasn't until correct me if I'm wrong, 2017 until you got your first sort of significant investment. So just tell me, like, why it took so long, or were you, bootstrapping yourself before you got to a point where actually I need investment to take my business to that next level?
Yeah, that decision to take investment is clearly a huge one in the lifetime of any business, and I suppose it didn't take us that long. The real answer is we were not looking for investment,
Right.
So we'd grown organically, and we had another business as well, which was very fortunate for us in the sense that we didn't have to put personal financial pressure on 200 Degrees in order to look after our own sort of living standards, because we were able to draw on that from another business. And we'd grown to a point in 2017 where we had a visible brand, we had some level of established reputation, and we started getting some approaches from venture capital style investors, and weren't at the time actively looking for investment. And this brings you to a really important decision making area within the life of the business. Should I take investment, and if so, why? And we'd always treated our businesses a little bit more of a lifestyle, and hadn't had aspirations to grow to any great scale. So the conversations we started having with potential investors, really lit conversation between myself and Tom. And the real important aspect of taking investment is that alignment with the investor. And so we needed to think longer term, and really decide if that's something we wanted to do. And in the end, we decided that we did want to pursue investment, and started having more serious conversations. So it was a bit of an interesting one in the sense that we weren't looking for investment, but when the approaches came, it gave us the opportunity to start looking a bit more long term.
Yeah, that's often the case for quite a few entrepreneurs. Like, we weren't looking, they came knocking on our door, which makes the process a bit easier. And I guess it got you thinking about the business in a different light, I suppose.
Absolutely. I think one of the things that you often get asked is what are the benefits of investment beyond cash? And I think there's two things which I think we gained hugely from. One is that strategic thinking to look further into the future is something that small businesses traditionally don't do well. They look a little bit shorter term, and the fact that you're having to align with an investor and look at what you might be trying to achieve over 2, 3, 5 years. And what do those goals look like in terms of growth, in terms of cash, in terms of capital, etc. It is a really, really good discipline for any business to go through, and that's something which certainly benefited us. And then the other thing which I think we really gained, once we took investment, was the structure of the board meetings and having non-execs on the board. And the value that they bring on a monthly basis. The board meetings, I think, initially can become a little bit of a headache. There's a lot of preparation and a lot of thinking, but once you've worked out what the KPIs are that measure the heartbeat of your business, and you really understand what are the key topics to be talking about on a monthly basis, they move from being something which might cause some anxiety to actually board meetings are something that are really valuable, and I actually look forward to, because it gives you an opportunity to really dissect where you're at in terms of your goals on a monthly basis, to throw around ideas, to listen to non-execs and some of the shared experiences they've got in other businesses, and you end up with some real value on the back of that.
Yeah. In terms of the investment, you went with Foresight Group. Yeah, and just tell us, are you able to say how much investment you received, and what did you do with the money?
So we received £3 million, which was quite a sizable investment for the size of company that we were at the time. And that was structured predominantly as equity investment. And one of the things that I'd always been a little concerned about was the nature of private equity, where an awful lot of it tends to be loan notes, which I was personally not massively keen on. I like the alignment that we're all in, and there isn't some huge loan note hanging over a company. So we took 3 million. We parted with 25% of the company for it. And in terms of what do we do with the cash, in terms of our growth, I suppose there was two things that we really needed to work on. We needed to grow some of our people function in order to help us have the right team that was fit for purpose in terms of growth. You tend to have many hats as a smaller company. You're the marketing executive at 1 minute, and then you're the managing director, and then you're packing the bags, and then you once you start working on the business and as you grow, you can't be those things. And also you have to recognise that a marketing executive who's actually qualified and experienced in marketing will do it an awful lot better than you will. And so some of it went on people and helping us to grow some of our core team. And then we also started to invest in new stores and new equipment in our roast house, in terms of giving us the opportunity to scale, and obviously growing the business through the shop route. So we've invested in various areas, and we're very fortunate in the fact that we've managed to retain the majority of the cash that we had invested 4 or so years ago, and remain in a strong cash position. So we haven't grown too quickly. We've grown slowly and wisely, and we've tried to stay robust as a company.
Yeah, and you've expanded locations as well, haven't you? In Manchester as well. Are you?
Yeah, we opened in Manchester. About six months ago, and there's ongoing negotiations for an additional store or two in that area, and quite a lot more, in the northern part of our region. So lots going on store wise at the minute.
All right, so possibly Leeds, maybe Yorkshire.
Yeah, we've been opening Leeds for a while. Right. We've opened in York. We've opened in the York Designer Outlet. I'm actually looking at a second store in York at the moment. So there's lots going on. I mean, one of the benefits of the pandemic is some of the deals you can achieve with landlords are much better than they were pre-pandemic. So it's to some extent, I say this with a touch of caution, but it's a bit of a buyer's market in terms of leasehold property at the minute, and there are some good locations available. So we're certainly actively looking to see where we can grow, but as always, we try to grow slowly and wisely and not rush things.
Yeah, must take the opportunity where you can, and the pandemic had other opportunities for you. So the digital side as well was quite a big part. I mean, was the digital side already quite a big part of the business before the pandemic, or was it accelerated because of it?
No, I mean it wasn't huge. It was something that we'd created. We had an online offer, but we'd never particularly promoted or invested in. We were, to be honest, quite distracted with the rest of the business. There's fairly large number of facets to the business, and smaller businesses often find it difficult to really focus on every area, all at the same time. We're literally only in the process now of recruiting a dedicated e-commerce manager. So even now we tend to outsource and people apply skills from other functions in the business to our e-commerce. But it did grow tenfold during lockdown, which was a really good sort of defensive measure against the issues we were having with our wholesale customer base, who were largely closed, and obviously with our own stores, which were closed or perhaps operating on a very minimal takeaway level. So it's been a really good defensive piece against those issues, and is increasingly becoming a very worthwhile and valuable part of our business.
Well, one thing that you mentioned was, when you took on the investment, and it's having somebody from your investor on your board. Did that help you quite significantly during the pandemic to have that, external person just, I say holding hands, but like helping you through the challenges? Would you say that was an added bonus?
Yeah, I think so. I think there's two ways of looking at the value of investment during the pandemic. I think some companies have found it a bit of a headache, and this brings us back to this loan note point. So where your balance sheet is absolutely loaded with loan note, a lot of companies were finding that they couldn't access the CBILS loans, and so that was quite a problem for some. Fortunately, because we didn't have that, we were able to access CBILS loans, which was really beneficial to us. But in terms of the actual interaction side, it was hugely valuable having. We've got two non-execs. We've got a non-exec chair who's an industry experienced individual who's involved in all sorts of valuable projects that he can skill share from. And then our investor director, who's obviously on lots of boards, and our investors themselves did a lot of information sharing, particularly during the early months, just to help everyone get themselves in shape and think about all the important aspects of their business in terms of scenario planning, as to how long lockdown might be, what support might or might not come, because obviously things like the furlough scheme didn't exist at the start, and so we were working out how we're going to manage our employees with closed shops for 1, 2, 3, 5, 6, 10 months. So the number of spreadsheets our FD did in that time, I mean, he likes a spreadsheet, but this was off the charts. So it was really helpful to have that information sharing as to how other companies are handling it, and what their thoughts and approaches are.
I suppose, it wasn't just having, the non-exec directors, but because you took that funding, you also were able to invest in having the right team in place as well. Because otherwise you might not have had the marketing person. You had the right team in place to help you through that journey.
Oh, absolutely, for sure. I mean, the furlough scheme was a little bit of a minefield. So having a finance director was so helpful, and various other members of the team were absolutely invaluable in helping us manage all of the surprises that tended to come on a day-to-day basis, as that first sort of March, April, May in 2020 evolved. So we were very lucky, and also we had a strong balance sheet in terms of cash, and at the time, although we didn't want to just blow it all on a pandemic, it did give us a lot of comfort and buy us some breathing and thinking space, that we weren't fragile and thinking that we might be disappearing within a matter of weeks, which I know some companies went that quickly, and many who survived and to get through it, were really stressed in the early days, because they were counting their cash flow in days and weeks, and with the lack of certainty that everyone had, that was clearly hugely challenging. So we were quite thankful for that as well.
There are lots of small businesses or startups, scale-ups. They might they've considered funding. They're a bit scared, especially private equity. They don't want to give a stake away, and they feel like somebody's going to come in and control them. You've been through the process now. What lessons have you learned, and what advice would you give to businesses like yourself who a couple of years ago were thinking, what do we do next?
I would say you have to really get to know your investor, and you have to become really aligned. So the sort of sure as life and death, once you've done a deal, you are doing another one. So an investor isn't investing to stay with you for life. They don't want to be there for 20 years. They want to be, in, and they want to be out in 3, 4, 5, 6, 7, 8 years, whatever the number might be. They tend to have a fund which often has a 10-year life value, and for a period they're buying, and for a period they're selling. So they will commonly be there and gone within 3-5 years. So you have to really align your journey with their journey, and if the two are not aligned, then I suspect that's where troubles will come. The other thing I think is you have to get used to allowing someone else to have a voice. So our investor has certain vetoes within our business. So, for example, I can't sign up a new shop without agreement, and there's other higher level decisions, and it is only higher level decisions where they do have a say. And you have to get used to the fact that someone else does have a say in your business, and you have to be really engaging and willing to share information. So there are a little couple of prepared points I suggest. And then I think the other point is to be really open, warts and all, about what your business looks like today. Someone is going to come and invest. I think it's quite tempting to paint the rosiest possible picture you can of your business in order to maximize your investment. And whilst that might maximize the number and the equity value, I think there's also a reality point where I think there's a lot of value in showing where you need support, where you need help, where you're not as strong as you'd like to be, because an investor can come into this with a real open mind as to how they might support that, where your challenges are, and how they can help you build a strategy for the future. So I think that they would be my key points of advice. And then probably the last thing, which is something that we didn't do, which is probably get some corporate advice during the deal phase. So I don't actually have any regrets about the deal we achieved, and I think it was very fair and equitable, and I don't look back on it with any disappointment. But I think without the right advice, that's quite possible. And although corporate fees can sometimes be a bit eye-watering, my impression is that the value you get from having sound advice on your team generally pays for itself anyway. So that would be my other advice: get a corporate advisor alongside you to really help support you in going to market and finding the most suitable investor and partner.
Yeah, that's a really good advice there, Rob. And not everybody will consider that, but I hope they will now after listening to you. You were talking about communicating with the investors, having everything aligned. When they come in and they talk to you about your business, they're not being critical, are they? It's getting you as a business owner to think about the business in a different way. Because I think a lot of people tend to sometimes take it as like, oh, you don't like what I'm doing, and you're being very critical. It's about having the open communication, isn't it?
Oh, for sure. You need to build a strong relationship with your investor, and you need to be willing to listen to things that you're not doing as well as you could do. You've invited them onto your board, you've invited them to have a say, and you need to be open to hearing what that is. No one wants the investor to try and run the business for you, but my experience, certainly from Foresight, who've invested with us, that's not what they try and do. What they do try and do is give you really good solid input on strategy, on planning, on people, on all various areas of the high level function of your business. They're not there to worry about the detail and the day-to-day running. They know that you as the business owner know more about that than they do. And certainly our investors are very respectful of that line between strategic and board level input and talking about whether you're brewing the wrong coffees in our example, or sourcing from the wrong countries. They don't try and cross that line, because they know that's where our skills lie. You do need to be ready. They're not criticizing. and I find, you know, all the input we get is really constructive and genuinely very valuable.
How many investors did you actually speak to before you decided on Foresight?
So I've probably spoken to about 5 different organisations. One of them probably ruled itself out based on the fact that it writes slightly bigger checks than the check that we were talking about, and the other 4 I kind of got down to 2. Based on the structures of the deals that they were willing to do in relation to the structure of deal that I thought was suitable. And then from those 2, the other organisation was actually prepared to put £1 million more in, but we didn't like the way they wanted to go about doing that. So we didn't just go after the size of check. You know, we did go after the right partner, and I believe we made the right decision.
And what are the plans for the business now in 2022? And you talked about opening more sites, you know, Manchester, possibly in New York. What's the sort of long-term vision?
So we talk about an ecosystem within our business where all aspects of the business help to drive and promote the other aspects, such as you know, online. You may well come and look at our online products and our subscription offering, having enjoyed a cup of coffee in our in one of our stores. You may well look to perhaps have a machine put into your business on the back again of knowing about our coffee, either through online or through one of our stores, and finding out that we supply machines in offices, and that's, as an aside point, that's become particularly important with this nature of employer brand at the moment, where businesses are wanting employees to come back maybe 1, 2, 3, 4 days a week, and they're improving the environment for employees, and coffee is going hand in hand with that a little bit. But overall, I think we are looking to grow all of those aspects, and we are also looking to add roughly 5 stores a year. We could accelerate it more, but we have a saying within 200 that we only do things we can do well, and we don't feel that we want to open a glut of stores and risk doing it badly. So we'll continue to grow, you know, relatively slowly but surely, and just keep bringing more coffee to more people.
And Rob, we talked about the investment and the growth of business. I've not actually asked you about your coffee. You know, just tell us a little bit about your quality of coffee and where it comes from.
Okay, so in terms of where it comes from, if they grow coffee, we probably buy coffee from there. So there's something called the Coffee Belt, which is roughly 1,000 miles either side of the equator. They're the regions where you can buy good quality coffee from, where coffee grows well. So the obvious places are places like Brazil and Colombia and Ethiopia, and many other countries around that grow coffee. Our Brazilian love affair is our house coffee, and we roast all our coffee within our roast house in Nottingham. And we're a small batch roaster, so we roast at 70 kilos at a time, and we roast at just a little over 200 degrees C, which is where the name 200 degrees comes from. And if you convert to Fahrenheit, then you brew a coffee at roughly 200 degrees Fahrenheit, which is the other reason for the name 200 degrees. So all our coffee is roasted by us in Nottingham. And we have a team there that roast and pack it and send it out to our wholesale customers in our stores, and obviously to our online.
Sounds amazing, and I'll be sure to be trying one out very soon. Well, thank you so much for your time, Rose. Really interesting to hear about your journey. Quite a positive journey with an investor, and from what I said, definitely about relationship and really, really good communication, having your vision aligned. So definitely good lessons to be taken from our latest session. Thank you so much for your time, Rob, and do stay on for the rest of the day. Thank you.